Over the past quarter, there's been a lot of change in the emerging autonomy economy. Select companies are now beginning to emerge and cement themselves as leaders while others struggle to find a path forward. As they seek the exit ramp, current market conditions are an indicator of a healthy market, a market that's both resilient and adaptable to change. If everything went up and to the right, the market would be extremely unhealthy and reminiscent of the 2019-2021 market when we were in the depths of the trough of disillusionment. Since then, the tide has gone out, and to paraphrase Warren Buffett, we learned who was swimming naked when the tide went out. There were a lot of naked swimmers during those days, even ones pretending to wear bathing suits as their vaporware began to wash away any remaining fabric of truth. To quote the famed value investor Benjamin Graham, in the short run, the market is a voting machine, but in the long run, it is a waiting machine. Indeed, it is, and Mr. Market rightfully did his job as he always does. After the euphoria evaporated, the autonomy economy went into a mild recession as companies struggled to raise capital and were forced into acqui-hires and liquidations. While investors lost money, they mostly did not lose faith in the autonomy economy. Fast forward to July 2024, and a lot has changed. The market has corrected itself, and the companies that survived the autonomy recession are stronger today. Kodiak, founded in 2018 on the cusp of the autonomy recession, survived, and they are thriving, having earned the number one spot on the autonomous trucking leaderboard category for 2 quarters in a row. Kodiak was able to survive the autonomy recession and build the Kodiak driver because of management's keen understanding of economics and geopolitics. While it has not raised the billions of dollars other companies have, Kodiak survived and thrived because they operate in a cost-efficient manner. As the odds of a soft landing in the US economy deteriorate by the day, operating a company with financial discipline is a key to success. Kodiak's biggest competitor, Aurora, was founded a year earlier in 2017. They similarly survived the autonomy recession and have grown to great heights. The company went public on November 4th, 2021, during the height of the SPAC bubble and the beginning of the autonomy recession. Unlike most of their peers that went public via SPAC, Aurora has survived and grown their business as they prepare for driver-out operations later this year, earning the company the number one spot on the leaderboard for autonomous trucking category 2 quarters in a row. While one can second guess the decision to go public and play Monday morning quarterback, one has to give credit where credit is due. Aurora survived. They are still public, and as investors have shifted away from the Mag 7 into small caps, Aurora has benefited from that rotation. Over the last month, Aurora stock has returned 91.40%. If you zoom out and benchmark Aurora's stock performance year to date against a basket of publicly traded LiDAR companies, AI, Hesai, Innoviz, Luminar, Ouster, and AVM, Aurora has outperformed the basket by 119.75% year to date. Investors who are investing in LiDAR companies are betting on the future of autonomy. But as we can see from the data, investors are now shifting their interest to vertically integrated autonomous vehicle companies. Aurora is both a developer of autonomous driving software and LiDAR software and hardware. Over the years, Aurora's acquired 2 LiDAR companies, Blackmore in 2019 and Ars Technology in 2021. These purchases have eliminated the need for Aurora to be solely dependent on third-party LiDAR manufacturers. Waymo has a similar strategy as they develop their own in-house LiDAR called Laser Black Bear Honeycomb. In our opinion, the moves made by both Aurora and Waymo have had material impacts on the LiDAR market as the independent publicly traded LiDAR market continues to struggle. We expect to see several acquisitions since LiDAR still plays a vital role in enabling SAE Level 4 autonomy for now. Then there's the Elon Musk issue of LiDAR being a crutch to enable autonomy. Is it a crutch? Who knows? The CEO of XPeng, he's now adopting a similar philosophy, as XPeng is moving away from LiDAR for their new F57 model. Are these signals to the market that the end of LiDAR is near? Who knows? But we believe the days of LiDAR being the dominant sensor of autonomy will change over the next decade. This is both a move that will be driven by performance and cost. As clarity on who the leaders are in autonomy emerges, investor dollars are once again beginning to flow into autonomy. This quarter, Wayve successfully raised $1.05 billion in a round led by SoftBank, and Wabi successfully raised $200 million in a round led by Uber and Coastal Ventures. Since May 1st, 2024, $2.7 billion has been invested in autonomous vehicle and autonomous truck startups. This is with a backdrop of sovereign wealth funds and multi-strategy hedge funds competing for opportunities to deploy capital into autonomy. Funds are now targeting autonomy as an investment opportunity because autonomy is now a business. It's no longer a question of, will it work? It's now a question of, how big can this get? The individuals leading autonomy companies are focused on revenue and building long-term profitable businesses as they continue to develop the technology. And that's what the funds are taking notice. What's the difference this time? Is that we're starting to see investors in the market coalesce around a handful of companies that are represented on the Autonomy Leaderboard. In the autonomous vehicles category, the market is once again consolidating around Cruise and Waymo. Cruise and Waymo continue to be the de facto leaders in the development of robotaxis. Despite the hiccups that Cruise has faced over the last year, we remain positive on the company, upgrading it to number 2 in the autonomous vehicle category on the leaderboard, with a positive outlook as GM has shown a firm commitment to Cruise. With a potential change in administration on January 20, 2025, which is now guaranteed, GM is extremely well positioned to handle potential 100% to 200% tariffs on vehicles imported from China, while Waymo is vastly underprepared. Adding to Waymo's woes is the discontinuation of the Jaguar I-Pace come December and their vehicle partnership with Chinese manufacturer Zeekr, owned by Geely Auto. Then factor in the coming Chinese software and autonomous vehicles rule proposed by the Biden Commerce Department soon to be released, and Waymo has an even bigger problem. In our opinion, Waymo needs a new vehicle partner and a new vehicle strategy. Cruise does not, as they have GM who will manufacture the Cruise robotaxis in America. Built in America, no tariffs. Built in China, tariffs. Tariffs so large they could have a negative economic impact on Waymo's business model. Not to mention the issue of public trust. Will the American public want to ride in a Chinese manufactured vehicle? We remain skeptical as 81% of US adults currently view China unfavorably, according to a recent Pew Research Center survey. Then there is the issue of the potential Alphabet breakup in a second Trump administration. If Alphabet were to be broken up, who would step up and fund Waymo or outright buy it? We are pondering these questions and what the long-term potential implications of tariffs and potential breakup could have on Waymo. For now, Waymo has retained their number 1 ranking in the autonomous vehicles category on the leaderboard with a bullish outlook because as of now, their business is firing on all cylinders. A company that seemingly does not want to become a business despite their technology is Zoox. This quarter, we downgraded Zoox to number 3 in the autonomous vehicles category on the leaderboard with a neutral outlook. Our ranking and outlook is partly based on a lack of urgency to build a sustainable business. Zoox is a company that seems to drift with no clear commercial strategy. Why? When Cruise faced their hiccups, Zoox had the opportunity to seize on that opportunity. Yet they were asleep at the wheel with no sense of urgency and a seeming lack of strategy. Why? What role is Amazon playing in decision making? There are a lot of questions about Zoox's long-term strategy and how it fits into Amazon. We publicly call on Mr. Andy Jassy to address Amazon's long-term vision for Zoox. What does Amazon hope to achieve with Zoox? Will Amazon ever introduce an Amazon Prime mobility tier? The market has questions as Amazon continues to sink billions of dollars into a venture that seemingly does not want to become a business. Zoox remains in the leaderboard for their technology, not for their business acumen or messaging skills. Wayve remained at number 4 in the autonomous vehicle category on the leaderboard this quarter with a positive outlook. We remain positive on Wayve and the company's cost-effective approach to autonomy that they call AV 2.0. New to the leaderboard this quarter is May Mobility. May Mobility has entered the autonomous vehicle category, the leaderboard at number 5, with a breakout outlook. We believe that May Mobility is the little engine that could of autonomy, as they have proven a business model that is scalable. With NTT being one of their largest investors, we fully expect May Mobility to expand to Japan in the coming years to capitalize on the country's aging population and driver shortage trends. Falling off the autonomous vehicle category of the leaderboard this quarter was Motional. As they exit stage left, we wish the company well and hope Hyundai eventually uses Motional's technology to develop personally owned autonomous vehicles for the Genesis brand. Keep a deadline, ignore a deadline, or just flat out not care. Either way, in the end, Tesla delivers. Tesla creates new markets. They did this with electric vehicles, and they are going to do it again with personally owned autonomous vehicles. It's only a matter of time until Tesla cracks FSD, otherwise known as full self driving. Tesla's entered the leaderboard for the first time in this quarter with a ranking of number one in the newly created personally owned autonomous vehicles category with a bullish outlook. As Tesla proves the market wrong and personally owned autonomous vehicles gain traction, Tesla will continue to be one of the most important companies in autonomy. From the roads to the highways, enter autonomous trucks. The market for autonomous trucks is beginning to consolidate around Aurora and Kodiak, with Daimler Truck and Volvo Autonomous Solutions gearing up to play significant roles. While we have not yet added truck OEMs to the autonomy leaderboard, we are keeping a keen eye on Scania as their company expands their autonomous mining operations globally. Autonomous mining is an area of autonomy that we view with a bullish outlook, and at some point in the future, mining will be added to the leaderboard. In addition to Scania, Volvo Autonomous Solutions has a growing autonomous mining division with its own in-house policy team. Looking from the outside is PACCAR. We continue to question their commitment to autonomous trucking. Even with their Aurora partnership, PACCAR is yet to demonstrate a desire to play a significant role in the future of autonomous trucking outside of testing partnerships. The way the truck OEM market is shaping up, Daimler Truck and Volvo will become the two most important truck OEMs in autonomy. Combined, they have over 50% of the US market share for heavy-duty trucks, in addition to a software-defined vehicle platform joint venture. The future of autonomous trucking has yet to be written, but the market is clearly speaking as it consolidates around the big four: Aurora, Kodiak, Daimler Truck, and Volvo. Even with this consolidation, there is still room for another player to enter the sector and gain significant market share. This is exactly what Torque, Waabi, and Stack AV are all vying for. While they vie for it, we are unsure if one of them will eventually emerge to challenge the big four. Torque is majority owned by Daimler Truck, but being in a marriage can be challenging at times. This quarter, Torque retained the number 2 position in the autonomous trucking category on the leaderboard, but we assigned a neutral outlook because of the reported strain in their marriage with Daimler Truck. Then there is Waabi, number 3 in the autonomous trucking category of the leaderboard, with the neutral outlook. Despite having recently raised roughly $200 million, we have concerns about the company's overdependence on Raquel Ersten. Could Waabi survive if Ms. Ersten were to step down? Is the technical talent bench strong enough to withstand a change in leadership? Rounding out the autonomous trucking category of the leaderboard is Stack AV at number 4, with a neutral outlook. Where Stack goes from here depends on SoftBank CEO Masa-san. No matter how good Stack's technology becomes, their future is controlled by one individual, Mr. Sun. As the sole investor, Mr. Sun calls the shot. What happens if Mr. Sun one day wakes up and decides to redirect Stack's funding into the latest AI investment craze? If that were to happen, Stack would unfortunately have no path forward unless they can diversify and attract outside investors. Over the next year, CEO Brian Selesky will have a series of hard decisions to make. Business is all about making decisions. Don Burnett is making all of the right decisions at Kodiak, as his bet to expand in defense is paying off. On the heels of Kodiak's $49.9 million Army Robotic Combat Vehicles Program award, the company was named to Silicon Valley Defense Group's NATSEC 100 list for the first time ever. With the wind at their backs, we upgraded Kodiak to number 1 in the autonomous ground vehicle defense category on the leaderboard and assigned a bullish outlook. Forterra dropped from number 1 to number 2 with a positive outlook. We remain positive on Forterra's business long term. New to the ground vehicle defense category this quarter is Overland AI in number 3 with a positive outlook. Rounding out the leaderboard this quarter, we added 2 new categories: software platforms and software suppliers. Despite what the talking heads on CNBC want you to believe, Uber will play a very large role in the future of autonomy. Uber has joined the software platforms category of the leaderboard at number 1 with a bullish outlook. Dara Khosrowshahi, CEO of Uber, has taken Uber back to its roots, being a platform that is going to act as the Visa MasterCard of autonomy. Joining Uber at number 1 in the software platforms category on the leaderboard is Uber Freight. Even though they are technically the same company, both Uber and Uber Freight are inherently different businesses with a common denominator: a platform. Uber will enable autonomous vehicles to scale in a similar fashion to the way Uber Freight will enable autonomous trucks to scale. Then there is the software supplier category. As autonomy becomes more complex and we move towards software-defined vehicles, companies will continue to require a platform to build and test on. That platform is Applied Intuition. With 18 of the top 20 automakers across the globe using their platform, they are doing something right. This earned the company the #1 ranking in the software supplier category in the leaderboard with a bullish outlook. While we do not know where the market is going to head tomorrow, we do know that autonomy is going to become an economy that we call the autonomy economy.